Hey there, TaxBots. I'm Justin Spicer from Legal Aid of Southeast and Central Ohio, and I'm here with Melissa Skilleter and Megan Sullivan, attorneys with our Low Income Taxpayer Clinic. With Halloween coming up tomorrow, we thought we would discuss a topic that can give people a fright sometimes, tax collections. So feel free to leave a comment or question, and we will answer whatever we can. Melissa, let's start out with some basic information about IRS collections. I know there's been a lot of talk in the media about recent funding for the IRS and tax enforcement. If someone owes the IRS money, will an IRS agent come and just take their stuff or take their money from their bank account or paycheck? Or can somebody even be arrested for having tax debts?
No, generally the IRS will not arrest you for owing money when you cannot afford to pay. They also will not just show up unexpected to take your property either at home or work or at your bank. There are steps that the IRS needs to follow in order to be able to take anything from you. You will be given several opportunities to pay any tax or to make a payment plan or other arrangements before they start the process of taking anything from you. They will, I say generally, you will know in advance what the IRS is going to be doing. And I say that generally because only if you don't open your mail or update your address with the post office, the IRS, you may not be getting all those notices where they tell you what's going on.
Yet another important reminder from our tax team to open your mail from the IRS.
Mhm.
So, speaking of notice, I've heard that the IRS has been sending out a lot of collection notices lately. Should people be worried about that?
People don't necessarily need to be worried. From 2020 through 2023, when the IRS was having a hard time keeping up with mail and phone calls due to the pandemic, the IRS stopped sending regular collection notices to people. Since the IRS is now better staffed, the procedures have returned to normal. So they sent letters to many people who still had tax debts from previous years to remind them that they do still owe the IRS and that they may start to receive more collection notices from the IRS.
Melissa, what was in those letters?
The letters contain an update about the balances due for all the tax years that they owe the personal income tax. It also had some online resources with information about creating an IRS account, how to pay your tax debt, and what to do if you can't pay. Some people have started getting those notices saying that the IRS is going to take more steps to collect the debt, and so it's time to take action.
So, Megan, how does somebody end up in a position where they owe a balance to the IRS?
Well, there are several reasons why a taxpayer may have a balance due with the IRS. A common reason is that the taxpayer didn't have enough money withheld from their paycheck during the year. Then, when they go to file at the end of the year, they discover that they owe. Also, people can owe the IRS because of an audit or if they didn't file their tax return on time. If you owe taxes, the IRS will send you a bill, and if you don't pay the first bill, the IRS will normally send at least one additional bill. If you don't respond, that is when collection actions begin.
So, Melissa, let's say I have a balance due and I cannot pay it. What do I do?
If you can't pay the balance you owe, the IRS has payment options available. The most important thing you can do once you learn that you owe the IRS is to act. Owing taxes can be very intimidating, very scary, like we've said, but the worst thing that you can do is ignore the problem. If you disagree with the bill, call the number on the notice and explain why you disagree. If you agree that you owe the money, you can call the IRS to discuss a payment plan or other collection options.
Megan, what kind of collection options does the IRS have available?
Depending on your income, you can qualify for three different options. First, you could qualify for a currently not collectible status. Second, you may be able to get an offer in compromise. Or third, you may be able to set up a payment plan.
Melissa, what's that first option that Megan mentioned, the currently not collectible status?
Currently not collectible status, or CNC, is when you and the IRS agree that you owe the tax, but because of your current financial situation, you can't afford to pay it. For this option, you need to show that you won't be able to afford your basic living expenses if you also try to make payments on that tax that is owed. To see if you qualify for a CNC, you can contact the IRS at 1 800 829 1040, or that's 1040, like the IRS tax return form. When you call, have documentation of your income and monthly expenses available when you talk to the agent.
Megan, that second option you mentioned was an offer in compromise. How does that work?
When you submit an offer in compromise or OIC to the IRS, you're asking them to settle the unpaid taxes for less than the full amount that you owe. An offer in compromise looks at a taxpayer's ability to pay over time. When determining a taxpayer's ability to pay, the IRS looks at the values of the taxpayer's assets, including real estate, vehicles, bank accounts, and other property. In addition to property, the IRS also looks at your monthly income minus certain amounts needed for basic living expenses. The IRS looks at the income that you're currently earning and the income that you're likely to earn in the future. For this reason, the offer in compromise does not usually work in situations when a taxpayer is just temporarily unemployed. The offer in compromise process does take a while to complete, and there are several forms that need to be submitted to the IRS. For more information about the option, you can go to irs.gov/OIC.
That third option is an installment agreement. Can you explain what that is, Melissa?
An installment agreement or a payment plan is an agreement with the IRS that you'll make smaller payments over time to pay the full balance. There are several types of installment agreements, and some require a setup fee. I will say that the setup fee is lower if you set up your payment plan online. If you have questions about an installment agreement, you can visit irs.gov/OP, as in Paul, OPA.
Megan, if I have balance due from 2017, can the IRS still collect?
Yes, the IRS can collect your taxes for up to 10 years from the date they were assessed. And assessed means the day the IRS puts them on your account and starts collection, which may actually be several years after the actual due date of your return. There are also situations when that time can be suspended or paused, which gives the IRS even more time to collect.
Melissa, what does it mean if I get a letter that says a federal tax lien was filed?
A lien is a legal claim against your current property as well as your future property. When you don't pay your first bill for taxes due, a lien is created by law and attaches to your property, all of it, such as your home or your car. In this case, a lien is not a piece of paper, but just a right that the IRS has to your property if they want to exercise it. If the lien reaches a certain dollar amount, generally this is going to be about $10,000 or more, a notice of federal tax lien may be filed at the county recorder's office in the county where you live. This notice of federal tax lien is a piece of paper that gives the public notice to creditors that the IRS has a lien on your property. A public notice is something that's available for anyone to view.
Megan, so what's the difference between a tax lien and a tax levy?
Well, a federal tax lien is a legal claim against your property. That is, that the IRS has the first right to take your property if you try to dispose of it. A levy is an actual seizure that takes your property or your rights to property to pay back your tax debt, like your house, your car, your income, money in your bank account, retirement account, or Social Security payments. There is a process the IRS has to go through to be able to actually take your property, and you will generally be given notice before it happens. Again, we say generally only because if you don't open your mail or update your address with the post office or the IRS, they may not be able to get those notices to you.
So, Melissa, what safeguards are in place to protect taxpayers if they get a notice of federal tax lien or a notice of levy?
Once a taxpayer gets a notice of federal tax lien or a notice of levy, they can request what's called a collection due process or CDP hearing with the IRS Appeals Office. The taxpayer will need to request a CDP hearing no later than 30 days after receiving that notice. So again, open your mail. A CDP hearing is an opportunity to discuss options other than a lien or levy and lets the taxpayer dispute the amount that they owe if they haven't already had a chance to do so. If you miss that 30-day deadline, you can request an equivalent hearing within a year. The only difference here between the two is that if you disagree with the outcome of the CDP hearing, you can appeal the decision to the U.S. Tax Court. That option is not available with an equivalent hearing.
So, Megan, if people have questions about the IRS collections process, where can they find more information?
If taxpayers still have questions, they can review IRS Publication 594, which will explain the collection process and the options that taxpayers have. To find that, they can go to irs.gov/pub594.
Okay, great. Thanks everyone for tuning in. And thanks to Megan and Melissa for the awesome information as always. The video of this session and the others in our tax chat series, including claiming tax credits when you don't need to file, are available on our Facebook page and on our YouTube page. Join us next time on November 8th when we talk about tax issues for veterans. Happy Halloween, and we'll see you next time.